Hello traders, The title of the video is Stock Trader begins to shed more light onto the S&P 500 stock index. Stock Trader begins to shed more light onto the S&P 500 stock index. We're on the yearly chart of the S&P 500. All right, this is a stock index. All right. And now we're going to start applying Fibonacci extension to the range of the candlestick bar of 2015. Now this is an advanced Fibonacci trading strategy that I talk about in a video that I titled Financial Market Trader Shares an Advanced Fibonacci Extension Tips at Day Pro Traders YouTube channel. I recommend to traders to check that video out so they may understand what I'm doing here. So I apply Fibonacci extension to the range of the candlestick about 2015. Here we are, and then we want to pay attention to the Fibonacci extension levels. Those are hidden, okay, key levels. So you can see that the price is now quite close to the 161.8% Fibonacci extension level of the range of 2015. That's the line here. And I can tell you that level, just call it 2300. So you want to know that level down, 2300 for the S&P 500 if you are trading it, because it's a resistance that is ahead of us right now, a resistance that the professionals are watching. So at this point in time, I will say to traders, all right, priority to, okay, bearish signal below the 2300 level, okay, 2300 level, and priority to bullish signal above that level. Very, very important because it's the 161.8% Fibonacci extension level of the range of 2015. We also know that if a financial usually bullish breakout takes place in the vicinity of that 161.8% Fibonacci extension level. So that's why it's so important for traders to be a little bit careful if you have been bullish so far, all right, because the year was bullish, all right, and the price coming near that level, you need to secure your gains. If it's going to be bullish, it will break above that 2300 level, breaks above, retest, we implement a top-down trading method to trade it. So a bullish breakout very often will take place in the vicinity of 161.8% Fibonacci extension level. For the S&P 500, that level is 2300. All right, very, very important. Apart from that key level, there is another level here that I call out here, the pink one here, 2344. So if you are buying above, okay, the 161.8% Fibonacci extension level, and the price is going up, if it reaches 2344, know that there is another resistance there. Well, why do we need to know all these resistance? Because financial instrument is going up, is looking for a better resistance level. The year has been bullish, and we have resistances ahead of us. We want to know where they are. The first one is at 2300, the second one at 2344. Prior to bullish signal above 2300 up to 2344. So if it breaks above 2344 and a final support, here we are. There's another Fibonacci extension level here. This level here, okay, I don't know which color I should use now to highlight it clearly to you guys. The 200% Fibonacci extension level. In my view, the professional traders will prefer to push the S&P 500 up to the 200% level or maybe a little bit above it before it starts finding a resistance. So the green line on my chart is at a 24, call it 2400. It's in fact at 2402, but call it 2400. It's easier to remember 2400. That's the 200% Fibonacci extension level of the range of 2015. When the price reaches that level, we will see a resistance. There will be a resistance, whether we are day trading, swing trading, there will be a resistance in that zone. because investors very often, when they are buying, all right, so 2015, now in 2016 they start buying. When the price reaches the 200% level, it's a psychological price level that the professional investors are watching, and they will take profit in that zone. I'm not saying that they will close all their bullish position, but there will be a kind of profit taking in that zone, definitely. So if you are day trading and the S&P 500 reaches that zone, watch it. You may pierce through it a bit before coming down a little bit to acknowledge, okay, that 200% Fibonacci extension level. All right. So those are the key levels I want traders to remember at this point in time. So important, all right, because the market has been bullied. The S&P 500 is going up. We have three resistances ahead of us: the 2300, the 2344, and the 2402. All right. But the most important resistance right now that we should not ignore is the 2402. All right. All right. 2402. There are other Fibonacci extension level 261, 314. So check them out and know where they are, so you can make excellent decisions. So for the 261, it's at 2568. 261.8% Fibonacci extension level is at 2568. The 314% level, for those who do not have the yearly chart, is at 2713. All right. One more thing, all right, very important, because the year has been bullish. All right. So this is the month of December. What we have noticed is this: when a financial instrument is bullish the whole year, all right, and we are in the month of January, a month of December, the last month of the year, the bullish traders, because they know that they have been the dominant force throughout the year, they will keep their position and would like to close the year bullishly. So if you are selling the S&P 500 at this point in time, because today is the 21st of December, and we have only a few days left before the year is closed, you need to be a little bit careful, because the market has been bullish the whole year, and the dominant force was bullish. The bullish trader would like to close the year bullishly. So be gentle if you are selling, even if you are day trading or swing trading, you are selling the S&P 500, be gentle. All right. This is about, okay, stock trader begin to shed more light on the S&P 500 stock index. I'm going to remove my Fibonacci extension tool, all right, and I'll leave those lines on my chart, okay. This time I want to point something to traders is this. We have here a chart pattern that we call the ABCD chart pattern that is developing. It's not yet completed. So it's a point A, point B, point C. The price is now heading to point D, somewhere up here. The point D for ABCD is somewhere near the zone of 3091. If the bullish momentum continues and the ABCD pattern is completed, in a case where the AB is equal to CD, if the AB of the ABCD chart pattern is equal to CD, we will set a bullish target at 3091. So just be aware of that. Just be aware of that, that an ABCD chart pattern is developing, though we have no resistance ahead of us using the Fibonacci extension, all right, 314, 261, 200%. You want to trade it one step at a time from one key level to the next key level, to the next key level, to the next key level, but know that an ABCD chart pattern is developing, all right. Will he reach this level? How will he reach this level? Will he pull back before going up to reach that level? Or will he find a resistance when he reaches the 200% Fibonacci extension level of the range of 2015, the level of 2402? All right. Now, the reason why we are recording the video today, as I told trader that I read the comment, is that a trader put a comment below one of our videos. I was asking us nicely if we don't mind recording a video about the S&P 500, and that's our response to that comment. So do not hesitate to put a comment what you want us to record, what we want us to talk about, And in due course, all right, we will do so. Okay. So this is what we are doing. So one more thing, okay, before, because I don't want this video to be too long. I think I've done it before. We apply Fibonacci, okay. We apply a pitchfork tool because professionals always use pitchfork tool. We apply Fibonacci. We apply a correction. We apply pitchfork tool to the S&P 500. All right, here we are. 3 point. First point. So my first point is the year 2000. My first point is at 1975. 1975. Were you born that time? All right, 1975. Okay, that's my first point. My second point is year 2000, the high, okay, and the low of 2009. Okay, with those 3 points, we put our pitchfork 2 on the chart. You can see that recently the price came and touched the median line of the upper half of the pitchfork 2. So this is what I recommend to traders to do. Whenever you draw your pitchfork 2, divide the upper half into 2 and also the lower half into 2. So you can see that this year the S&P 500 pulled back to retest the median line of the upper half of the pitchfork 2 on the edge. I hear you, you said it, on the edge. All right. So because there is a video that I posted at the George Rio channel recently, it's a very, very important video. All right. Trading on the edge explained. All right. Check it out on YouTube. Trading on the edge explained by George Trio YouTube channel. Okay, so you see here, touch it on the edge. So what do we need to do now? So using a pitchfork tool, we also recommend to traders that whenever you do your pitchfork tool, you can project the width of the pitchfork tool. You see here, this is about what? I hear you, you said it, market geometry. That's correct. Market geometry, a multi-talented trading, all right? So we project the range of that pitchfork tool, okay, in the direction of the price, because the price breaks above it. We measure the width of the pitchfork tool, and then we project it in the direction of the price, and then we just draw a line that is parallel to the pitchfork tool. This line, is it parallel to the pitchfork tool? Oh, yes, it looks like it. That's it. So that's the range of our pitchfork tool, and then we divide it again into 2. All right, and nothing can stop us to subdivide. You see, this is our new pitchfork tool. So if I put it like this, it will look like a pitchfork tool to you in a minute. Hold on. Push this line a little bit up. Hold on, please. Really? Does it look like a pitchfork tool to you now? Okay. So we project the width of this first pitchfork tool in the direction of the price. So you see the blue pitchfork tool. Does it look like it? So if this section is the lower part of our new pitchfork tool, this is the upper side of our new pitchfork tool. This is the median line of our new pitchfork tool. And again, we'll divide each half of those, each half of that pitchfork tool into 2 to know where are the key levels. So there's one there. You see how I do it? Do exactly on your yearly chart. I know some traders are using TC2000 like myself, so which is good because you can see the yearly chart, and then you divide them also into 2. So as the price going up, apart from the horizontal key level that we were talking about before, okay, the 3 key level, you remember them, 2300, all right, 2344, 2400, all right, the Fibonacci extensions apply to the range of 2015. Apart from those key level and also the ultimate bullish target at 3091, we want to pay attention to the projection of the pitchfork tool in the direction of the price. So this will help us to make excellent decision. All right, you see now? So if it's going up, you see, there's so if you don't draw those lines, you know there's a trend line here, 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 there's a trend line here. So you want to look for excellent trade where high probability trade on the edge of normal key level or trend lines. So that's all we can say now when we are talking about the pitchfork tool. Now that we have all those lines on our charts, okay, we're going to go now because we're on a yearly chart, which time frame should we use? But now we'll go to the monthly chart, okay? Yearly chart, monthly chart, daily chart, okay? Go to the monthly chart and let's see what's going on here. Whether we have, so on the monthly chart, you see the price did pull back, okay? Was retesting the median line of, okay, remember the first pitchfork too, the median line of the upper half of the pitchfork, you retested here. Now it's heading towards the 2344. Okay, so but there is 2300 before 2344. So you know where are the key level now, and you also have those blue, okay, trend line on your chart. With that, you will be able to make excellent decisions. So if you pay attention here, the price breaks above. You see my turquoise line here, it breaks above it, retest. This is a bullish trading setup. Trader responded. You see also retesting the top of my pitchfork 2, the brown pitchfork 2, breaks above, retest. That's what you are looking for if it's going to go up. Breaks above, retest. Bullish trading setup. Implement different time frame to trade it without ignoring economy news. All right. So the year is almost finished. One more thing before we close this video, I need to mention to traders that usually, so when we come to January, I don't usually post a video in January because it's not the best time to play around in the market because the market is trying to adjust itself. You can day trade, which is okay, but for swing traders and position traders, it's better to wait until mid-February. When I say that, people think that, George, no. But I'm just saying it again. Be aware of that January, for traders who understand area wave, we want to see first the first wave, all right, and then a bit of pullback, and before we want to catch the third wave. At the beginning of each year, the S&P 500 will try to readjust itself a bit. So those are not, in January, it's not really, okay, trading activity. And also, remember, we have a new president in the United States, Mr. Trump. The new administration will be in place. Probably we may have a new, okay, chairman or chairwoman or the same chairwoman, all right? We may have a different policy. So the market will use January to see, all right, just to see what's going on first. So you don't want to jump into a trade or make, okay, a hasty decision, all right? Right? You don't want to do that. So January is a month where the market is asking a question: should we buy this year or should we sell? And people will be taking profit also, portfolio adjustment, preparation for the new year. So that will be the first month of the year. We talked about this before. I explained this in one of my videos. Same thing for swing trader. A week as it started, Monday, the market is asking what's going to happen this week. So Monday, it's not see all kind of blah, and then Tuesday, after New York is open, the market very often will show direction. We are going up. We are going down. Okay, and so on and so on. So first week, first day, all right, first month, first year, and so on and so on. First wave, and so on. This will help us to know what is going to happen. Like we use for area wave trade, we use the internal waves of the first wave, of the internal wave of the first wave to predict the whole motive years. So we want to analyze what is happening in January to have a bit of idea what is going to happen in January 2017, what is going to happen in 2017. So no rush. You will notice that in January, you may not see me posting too many videos. You may be wondering, George, where are you? What's going on? All right, it's just because we want to pull back a bit, all right, and just watch until the dust has settled. Then you come out and make, okay, better trading decisions. All right. I hope you will find this video useful, and I would like to thank the trader who has put the comments there. If you have any more thing to say, all right, put in the comment section. And of course, well, I will be busy, all right, recording another video. I would like to take this opportunity to say to traders, thank you very much for following us this year 2016. I think I have posted more video than before, all right, so we have 5 channels. So George Trio channel, 2-4 area wave, Day Pro Traders, all right, 2-4 Forex Trader, 2-4 Stock Trader. This video will be posted at 2-4 Stock Trader YouTube channel. And I push it a bit are recorded constantly, especially at 2-4 Elliott waves, and I try to push myself a bit too far. This is what YouTube want, fresh content, all right, coming in all the time. We will see how 2017 will go, but I would like seriously to thank traders that are following us, and I hope okay, you have found our channels, all right, useful. Sometimes I may say okay 100 times, all right, or I may say something that all right, may piss you off, so to speak, all right, one day, and then you resubscribe the next day, which I know, all right, and we are still friends, all right. But if you have any questions, seriously, all right, put it in the comment section, and because I will record another video. So I'll take this opportunity to say to traders, Happy Christmas, all right, and Happy New Year. Best wishes to you and to your family. And I will be posting again more video until the end of this year. Before in January, you may be wondering, George, where are you? Okay. This is the end of the tutorial talking about stock trader. Begin to share more light onto the S&P 500 stock index. All right, there are 3 key levels that we do not want to forget. The first one is 2300, easy number to remember. Next one 2344, very close to 2300, and the third one is 2402. All right, now by setting a price target using the ABCD chart pattern, there is a greedy bullish target in the far future. For the long term, the bullish target for the S&P 500 is at a 3091. Will it reach that level one day? There is a many resistance ahead. Apart from the horizontal resistance level, we also have a trend line. When we start projecting our annual pitchfork tool in the direction of the prime. At the beginning of the video, also I apply here, okay, Fibonacci extensions to the range of the candlestick bar of 2015. So in January, what should we do? In January, we will come again and we will apply Fibonacci extensions to the range of which year? 2016, because a new year is beginning, and we will highlight all the Fibonacci extension level in order to trade around those key levels in 2017. All right. So as I'm talking about Fibonacci extensions, I know some traders do not subscribe to Day Pro Traders. They only subscribe to Stock Trader, 24 Stock Trader YouTube channel. But I recommend that you subscribe to Day Pro Trader and 24 Stock Trader channel, all right, or 24 in your way, Day Pro Trader channel, all right, and 24 Stock Trader. You want to subscribe to those channels, and 24 Forex Trader YouTube channel. So I've been recording some video recently. I'm just going to mention them to you so you may go in your own time watch those videos. The first one that is so important is this one: Financial Market Trader Shares and Advanced Fibonacci Extension Tips. You too search that video, and it is posted at Day Pro Traders YouTube channel. Financial Market Trader Shares and Advanced Fibonacci Extension Tips. Powerful. How we apply Fibonacci extension. The next video that you must watch, or you must promise me that you're going to watch, is this: Technical Trader Explain a Fibonacci Extension Trading Idea. Technical Trader Explain Fibonacci Extension Trading Idea. All right? Watch those 2 videos so you may understand how we're going to apply Fibonacci extension at the beginning of 2017, how we turn it upside down, all right? All these things, you want to know them carefully so you may know where are the hidden, okay, key level to avoid trading the financial market blindly. So to trade the financial market blindly is to if you are trading, you don't know where are the resistance level, where are the trend line, where are the key level, you are trading blindly. And you don't want to do that. But one more thing before I close this video, remember the 200% Fibonacci extension level, the level of 2402. It may go a little bit above it, but the market will acknowledge that level. Happy trading to you all. Happy Christmas to you. Happy New Year to you. And speak to you soon. We are the TSTW24 traders talking about stock trader begins to shed more light onto the S&P 500 stock index.